All right, all right, all right. What's going on? What's going on? How you doing today? What's going on? I'm coming to you guys from Decatur, where it's greater. Trying to find the right background for today. What should I use today? Hmm. Just waiting for a couple of people to come on. Just waiting for a couple more people to come on. We can go ahead and start. All right. So what I want you to do is I want you to write your comments. I want you to write your I want you to write the stock that you want in the comment section. Write the stock that you want in the comment section. All right. And I'm going to analyze your stock today. So I'm just waiting for a couple of more people to join. Welcome to the Millionaire Challenge. I'm your host, Joel Harrison. I am a millionaire investor. And my job is to try to teach you guys how to make money like really fast. And I know you hear a bunch of educators all the time tell you that they know the way and they have these different strategies. But most of you guys don't know the fundamental ways of viewing the market. And that's why I do this for free. All right. And my job is to try to make sure that you guys understand the proper way of approaching the market. And, that's just my job. That's my job. And that's what I intend to do. I am a full-time day trader. Let me pull up some of my stats. All right. I am a full-time day trader. I'm an expert in stocks, options, futures, and cryptocurrency. So why are you here today? All right. So I watch CNBC, I watch Fast Money and Kramer, and I watch all the same things that you guys watch every day. And there's kind of like a disconnect, right? You have your educators that teach, you have your millionaires on TV that also teach you how to do certain things. You see certain charts pop up, but nobody is really interacting with the public. Like, let's look at some of your stocks. Let's analyze your stocks. Let's try to understand why we're buying these stocks. And my job is to try to be innovative and try to change the way that you view the market. All right, so I created the Millionaire Challenge back in 2017 because I saw the market in different ways. I was I was an investor, I was a trader, I was trading stocks, options, and futures. At the time, cryptocurrency wasn't even around, and I've been able to see how money was made. Money was made slow, money was made fast. I have my foundation in place, but I also am aggressive. And my job is to teach you that when you come into the market, you don't look at the market in one way like most people do. You come into the market and then you decide, how am I going to position myself in the market? So there's different videos that I do at the end of the week on Fridays in the Insider Trading Room. It's just a different way that we look at the market. It's usually your investors that we're talking about. Today, we're talking about your traders that's trying to make fast money, that's trying to get to $1 million really, really fast. So if you're a conservative individual and you're on this call or here for this particular session, this is not for you. This is for the traders that's trying to make fast money, and we're trying to figure out how to do it through stocks, options, futures, and crypto. And my job is to look at the stuff that you guys have and see if it can realistically happen, because you guys are throwing thousands and thousands of dollars at certain things and y'all don't know how to go about approaching the market. And it's really, really frustrating to me because, investing is mad easy to me. All right. It's really, really, really easy. And a lot of you guys make it hard. And, I say that all the time. Investing and trading is easy. You make it hard. And anybody that says that it is hard, it's just because they don't understand how to do it, or they don't know how to approach it. That you got investing minds trying to trade, and you got trading minds trying to invest. Well, I have a well-rounded game, so I can tell if I'm investing or if I'm trading. But today, we're going to talk about trading. All right. That's why I created the Millionaire Challenge. But you got to understand numbers when you're investing in the market. And when you're trying to make fast money, you know, I don't want to just go after something because it's hot, right? I want to go after it because it's hot, but I got to know where it can go to. right? If I don't know where a stock or an asset or crypto can go to, what's the point of me even investing in it? And I see a lot of you guys hoping and praying when you're doing that. I see you guys hoping and praying when you're buying your options. I see you guys going and running out and taking these classes for tens and 20. Guys, classes should not cost $20,000 for an individual that you never heard of, right? I mean, there are Harvard classes that don't even cost that much. And I know what it is. You got to make money so fast that you believe in these people that you see, including myself. But I'm gonna tell you what separates me from everybody else. A, I'm a millionaire. All right, let's get this straight. B, I had to build my accounts to reach millionaire status. C, I show you what I'm buying. D, I'm educated on the market, and I also make my money through investing, not educating. All right. I'm educating because I'm so frustrated hearing friends, family get robbed by these educators out here charging y'all $10,000 and $20,000 for classes and don't teach you the technicals. If you didn't pay $15,000 and you never learn what support and resistance and trend line and 200-day moving average is, you got robbed. All right. And that's on you. And I don't want you guys to make the same mistakes again. Everybody makes mistakes. All right. Just don't make the same mistakes twice. Right. And if you see your friends about to make the mistakes, you let them know also, yo, you need to go do what would Joe do in this particular situation? If I'm going to listen to this educator and I'm going to pay $5,000, what the hell have they done? Right? Can you show me a receipt? Can you show me something that you've done? If you call yourself a master at this or a master at that, why? I do it. All right. And I'm not even, I don't even have the ego to put master in front of anything that I'm doing. Right. I just, I just teach and I just let my receipts and everything that I talk about, and let all the people that have taken any of my education, they're the ones that give me my praise or give the strategies that I use praise, or listen to the individuals that are in the insider trading room or the ninja trading room that talk about the market, the praise, right? And we spent a really, really long time trying to make a very, very legitimate room. Like I literally go through every single solitary post that's posted in that room. A lot of y'all don't know that. Y'all go into some rooms, everybody can post. Not in my room. You don't just come in my room and just post stuff and post education, because 99% of y'all don't know what the hell y'all talking about. All right. So I've ran it. There's enough people that are on, but investing and trading is easy. Y'all make it hard. But welcome to the Millionaire Challenge. What the heck is it? All right. The Millionaire Challenge is definitely changing the way that you look at the market. All right. I know that you might have 90% of your assets in a 401k or an IRA or real estate, or you have somebody manage it. I do not want you to fire that individual. I don't want you to sell your real estate. I don't want you to sell your boring portfolio. What I want you to do is I want you to take about 5 to 10% of your assets. And from here on out, I want you to take about 1 to 5% of whatever your hustle is. I don't care what it is, and start aggressively approaching the market with your foundation in place. You still will be okay, but you got to change your mind, and you got to change the way that you look at the market. And you got to say, you know what, these funds are put together so I can make, at least 10 times my money. I'm trying to flip my money when I'm doing this. All right. And when you flip your money, it's going to look like this. All right. So the quickest way to get into $1 million is not saving $50,000 a year for 20 years. I want you to do that in your long, boring 401ks and IRAs and your real estate that you're holding for 20 and 30 years. All right. I'm not against those investments, but you also need to be aggressive. There's no reason why look, guys, I'm not telling you to go out there and buy crypto, right? I'm not telling you to do that. But when you are a trader and you see certain asset classes moving and you're just seeing it go up in value without you, and then you got people telling you, "Oh, don't worry about that. It's going to just bubble." It's going to just bubble. I want to be part of that bubble, right? Cryptocurrency is the best asset class that's made the most money in the last 10 years. And y'all could have got into it 4, 5 years ago. And y'all just watched gains go for 3, 4, 5 years. You know why? Because you're listening to thousandaires. Meanwhile, the billionaires and the millionaires like Elon Musk, like Tim Cook. That's right, guys. Tim Cook, who pretty much has the largest company on the planet. You got Elon Musk, the richest man on the planet that own crypto. But yet, y'all listening to Uncle Tim tell you that it's worthless, right? You got to start listening to the people that are making money in it. All right. So that's the one thing that we're going to start doing. We're going to start vetting the people that we're listening to, and we're going to start listening to the people that literally control the market. But what we're going to talk about today is we're going to talk about the what would Joe do method of entries, right? I'm going to show you guys a bull flag pattern on how to get into things. When I look at your stocks that you guys are going to give me in the comments. But this was a post that was in the Insider Trading Room today, and I really, really like that post because it really focuses on the numbers, right? This is all a numbers game when you're trying to make a lot of money, right? The fastest way to $1 million is flipping $1,000 10 times in a row, right? But the fastest way to getting 100% return is finding something that's 50% down. What do I mean by that? That means if Apple goes from $50 to $100, and we know that it's bullish by looking, I'm going to show you guys a 200-day moving average later, and you know that it's bullish and it's going up in value, and it drops 50%. So it's $50. It goes to 100, then it drops back to 50. All right. It dropped 50%, but if you get in at the $50 level and ride it back up to $100, you're going to make 100% gain. That means usually asset classes that drop really, really hard, when they go back to their highs, and remember this stat, 90, you have a 90% chance that a stock that's pretty much in the Fortune 500, if those stocks drop, you have a 90% chance that they're going to go back to their all-time highs. So when you see a very good stock like a Square or a PayPal, right, that you know has growth potential, and they drop 40 or 50%, y'all should be licking your chops on buying it, because if they ever go back to their highs, you just earned your first 100% return. All you need to do is that 9 more times and you at $1 million if you start off with $1,000. And I'm not telling you to do it with all your assets. I'm telling you to do it. I don't care if you got $999,000. Take $1,000 and get aggressive with it. Have a little fun in the market. All right. Have a little fun. Learn how to trade. Most of you guys don't know how to make a dollar. Learn the skill. A lot of you guys don't have it, no matter how smart you think you are. Okay. But I love this because it kind of gives you an idea that when things fall in price, you can make a lot of money to the upside. You options traders, if you really, really love an option, and I'm not saying that it's a 6 or 7 day option, and I'm not telling you to use this strategy. All right. If you're watching an option and that option, let's say you're in it and it drops, 20 or 30%, and you get out because you have your risk to reward in place, and then you see that option drop about 80 or 90%, you can gain about a 900% gain if that option ever got back to the price that you were looking at it at. Sometimes I'll see an option that's down 50%, and then the day after that, it'll go down, 50 or 60% from that value. You can make a lot of money re-entering on some of the options trades that you guys have already been a part of and that you've gotten out of. And then you guys are done with that option. And I'm like, guys, continue to look at that option and see if you can get it for a lower price. But the problem is, a lot of you guys don't even know how to chart your option. So I'm going to show you guys how to do that for free today as well. But let me get through this because we're not going to have that much time today. If you want your charts to look like mine, I'm going to show you guys beautiful charts today. Nobody's charts are more beautiful than mine. If you want your charts to look like mine, you can go to my PayHip. You can download this Thinkorswim chart setup. It'll walk you through how to not only use the indicators that I'm using today, but you can also make your charts look like mine. If you haven't downloaded my app, go ahead and do that now. It's free on Android or iOS. You can download my app. There is a subscription service because there are alerts. There are alerts because remember, guys, I am a real trader. I know I'm a unicorn. You never heard of people like me, right? Educators that show what they're doing. What? Yes, that's me. All right. But I send out alerts when I'm buying certain stock. And then if I'm getting out of those particular positions, will tell you when I'm getting out of them. Okay. I just recently bought a whole bunch of Disney, and I think Disney did well today. I do have webinar week next week. All right. Next week is webinar week. It's December 14th through the 16th. I'm going to come on live, not a recorded video. I'm going to come on live for 3.5 hours every single day. 10 hours of me ranting, teaching you the fundamentals of the market. First day, I'm going to teach if you're a beginner and never heard of a stock before, or you know anybody that's a beginner and don't know anything about the stock market, they need to attend the first day. All right. The second day I'm gonna teach you guys options, which is the ultimate trading tool. And then on Thursday, I'm going to teach you guys how to day trade, right? So each day is set up where it's macro investing. The second day is ultimate trading. And then the third day is for people that want to generate income daily. All right. I try to give my all in those 10 hours. And then you're going to have access to those 30 days. So it's kind of like being in a class for a month, right? I'm going to give you the information in the webinar for 30 days. Your job is to practice for 30 days. So it's a 1-month class. All right. That I'm going to teach the first 3 days. And then you have to take it upon yourself to watch the videos over and over again and apply and practice the particular strategies. If you need to get a one-on-one consultation after you do webinar week, you can always book a one-on-one with me. All right. I just now moved my one-on-one consultations to the weekends between like 10 and 2. So if you want to do a one-on-one consultation with me where you show your screen and I show my screen, and you can ask me anything about the stock market, I don't care what it is. All right. Remember, I am a true investor trader, right? And I'm an expert in stocks, options, futures, and crypto. As long as it's in that particular area, I should be able to help you. Make sure that you join this room. For those that are watching this, the Insider Trading Room has over 5,000 members now. And then anybody that's ever bought anything from me, you can go to the Ninja Trading Room. And my poor YouTube that pretty much nobody knows about, I have one set up for videos as well. I'm going to also put this video there for people that missed it. All right. Again, I have an Instagram that's been popping lately. So on Instagram, I'm also posting educational stuff, pretty much in the stories. I post pretty much all the stocks that I've made 100% return in within the last, 18 to 24 months, so that you guys can see, I try to be a little bit transparent on what I'm buying, why I'm buying it, and you guys can see the gains. All right. And this is what y'all ain't doing with other educators, right? You're just taking them for whatever they say. All right. I'm actually investing. I am a real trader. All right. I'm using real money and real strategies and real accounts. So if you haven't joined my insider trading page on the Millionaire Challenge page on Instagram, please join. And if you need to get educated right now, you can always go to my PayHip. You can download videos right now. They're affordable for you because there's no reason why y'all should be paying $10,000 for a class. It just doesn't make any sense. You can do a consultation with me, and then I can guide you and tell you where you need to go. All right, I'm here for you. Again, you can get your Thinkorswim chart set up there, and that's at payhip.com/what would Joe do. All right, let's get started. I got all of that crap out of the way. Let's get to business. Welcome to the Millionaire Challenge. Let's look at the spiders today. The spiders is the S&P 500. Let me pull up comments. We got a lot of them. And let's start looking at some of your stocks. First stock I'm going to look at, though, is the spiders. Let me pull up my stock star list. And I'm going to change this view so that you guys, I'm not that vain. I'm going to put myself down in the bottom part of the corner of the page. Let me change the banner. Let's go with this. I'm going to put myself at the bottom so you can see the bigger screen. Okay. All right, cool. Y'all know who I am. I'm Joel Harrison. I guess you can see that there. And again, if you need to know what my Instagram and all that is, just go back to the video in the beginning. All right. So let's look at the spiders. The spiders is the S&P 500. It's what most traders are going to use. Let's erase everything. It's what most traders use to view the market. Okay. This blue line that you're learning today is what every trader and investor uses to let us know if the market is bullish or bearish. Very, very easy. If we're above the line, that means the market is bullish. That means you can buy it. If it's below this line and this line is going down, I want you to stay away from the market. Okay. As you can see, this is what we're experiencing right now. The market is red, 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 red. Now, my indicators are going to look different than yours because I have a trending indicator on my platform. Just these little fundamental tools like this, like if you can't do this, I can't even do it at this time. If you can't do this and know that we broke this trend and the market should go up and this is a resistance level and that's the first level that it's probably going to, fire your teacher right now. Fire your teacher. Say, hey, I ain't coming back. Okay. Because if you haven't learned this, you're probably not making money in the market. And I'm trying to be as real as I possibly can. I offend a lot of people because I don't have time for the ignorance. Like I just don't. I'm older now. I think as I get older, I just don't have time for the flim flam. I don't have time for the frauds. I don't have time for the fake it till you make it type cats. I just don't have time for it. If you're not educated, you can't mess with me, right? You just can't. And that's my whole thing. I don't have like even when you come on consultations, like some people want to just sit and talk about life. I don't want to talk about that. Let's talk about getting you on the positive side of the trade. All right. And I know I can be intimidating, but my job is to try to help you guys get to where you need to get to. But right now, the market is selling off. And as the market is selling off, that's fine. Things that you guys need to look at is the S&P every day, right? If you're a trader and you don't know that the market has only been down about 7% in the last 18 months, how are you trading the market when you don't know those simple basic numbers? How are you trying to find options and know where the bottoms are going to be? A lot of you guys are hoping and praying. You're trying to use your gut because maybe you made some money during 2020. Everybody made money in 2020. But if you want to continue to make money, you got to give yourself an edge by taking fundamentally good companies and learning how to apply the technicals. All right, so the spiders, all we did, guys, today was come back to the top of this trend line. I don't know if a lot of y'all even know that. We ran 700 points. We did on the Dow. We literally just came back to here and stopped. Why didn't we keep going? Because that's not what the billionaires and millionaires are doing. We knew where we were going when we were coming up. And then when we finally got there, the buying stopped. And we said, all right, what's next? All right. So how do you capitalize off something like this? Well, first of all, you got to know why you're buying what you're buying. Okay. Now the S&P was only down 5%. That was the magic number that the S&P dropped. Every single time the S&P dropped, anytime you turned on the TV and you heard that the market was down, 5% was the magic number for the last 18 months. So naturally, when it dropped 5%, it went up in value. Now, is this the big one? We don't know that yet. We don't know if this can reverse. But even if it reverses, guys, we know where the first level is going to go to. It's going to come down to this support area right here. It's going to come to this support area. This is all taught during webinar week. And if this support area is going to be the same area that this 200-day meets, and let's say the market drops to that particular mark, most of you already should know where that value is. Oh, if the S&P 500 drops to the 200-day moving average, that little blue line that Joel always talks about, the market's going to drop 9%. Some of y'all still don't even know what that means. Okay, so if the market drops 9%, what does that mean, Joel? Is this the big short? Nah. Right? Why? Because the market moves 10%. The S&P 500's beta is 1.0. Y'all know what 1.0 means? That means it fluctuates 10%. Did y'all know this? Did your teacher teach y'all that? It fluctuates 10%. If I was in real estate in Atlanta and I was looking for a house to flip, the first number I look for is a house that's at least 35 to 50% off. Why? Because if I'm going to flip that property, I got to put work into it. And then there's got to be enough equity in it so that when I sell it, I make some money. Stocks ain't no different. Stocks are no different. So if you're trying to get rich off the S&P, now why am I talking about the S&P? Because there's so many people out there that's like, don't worry, just buy the S&P 500 and you'll make a whole bunch of money. Don't worry about the market. Don't worry about buying stock. Just buy the S&P 500. There's 500 stocks. Just invest in it, and you're going to be all right. And people will sell their whole portfolios of Apples and Amazons and Googles, and then they'll go run and put it in the S&P. And you already have a boring account. And then you go on your own, and then you create another boring account. So you got two boring accounts. Now, you got into this game so that you can make fast money, but you just created what you already had because you don't know the numbers to look for. So what we're going to start doing is knowing the numbers to look for. And the numbers that we want to look for is we want to look for something that can do this. In your aggressive account, if a stock can't double in price, stop buying it. I don't know how hard it is to explain that to people. If a stock can't double, how the heck you going to get the type of numbers that you're looking for? And then even if you get into something, you got to know that it can double. And the only way you're going to be able to see if a stock can double is you got to see what it's done, period, or what it can actually do. All right, the S&P 500. Let's go back to here real quick. And I'm going to get to your stocks. I promise you I will. But let's get to let's go to, hold on. Let's go to Yahoo Finance real quick. Let's pull up the S&P. Very quickly, watch this. The S&P 500 year to date is up 26%. That's ridiculous, seeing that it averages 10% a year. All right, I think it's been averaging about 14% a year for the past, I think, 10 or 15 years. All right, so we have a pretty decent year, but it's not going to give you a double. It's not going to get you to those numbers, those magical numbers that you're looking for. You know, 5 years ago, if you bought it for $235, y'all know how long it took for it to double? It took from 2017 till now. It took 4-5 years to double. I'm trying to double my money fast. And here y'all are listening to the wrong people, getting into slow moving things. Let your money manager handle your boring, slow account. And we're going to start looking at stocks that can double. And then if you're trading options on it, you're really, really going to start making a whole bunch of money. All right. And you got to know what the beta is to be able to do that. So even if the S&P starts to grow in value, you use this as a gauge because this is kind of what the market is doing. All right. Anytime the market hits anytime the S&P hits what we call the 50-day or the 200-day moving average, you can buy some of those high volatile stocks and try to make a little bit of money off of it, right? This is the 50-day, hit a little support area, started to rise, even though this was around September, October, and it started to rise from 432 all the way to 473. That was about a 10% move. Watch. This went from here to here, and it gave you about an 11% move. The same time frame, if you were just watching the S&P 500 right around September, October, and you bought something with a little bit more beta, like Apple, the largest company on the planet that everybody and their mamas invested in, but you still want to go buy penny stocks? When you go buy Apple around September, October, the S&P hit the 200-day. Apple didn't, but it didn't matter because Apple is Apple. I'm erasing everything here. And all you had to do is put up this one little line. Y'all be using 15, 20,000 indicators. And old Jolie Joel put one line here, one line. And then we broke that line. And then the S&P started to go up. And I know that the Apple is, I think, 10 or 20% of the S&P. And then the S&P started to rise. And I knew where the S&P could go. And I know that Apple has more beta than the S&P. And I know that the S&P, if it gets back to where it goes, it's only going to go up 10%. So I bought Apple so I can get more beta so that it can go the same movement. But guess what? It moved. Okay, it didn't move as much as the S&P, but I'm sorry, it didn't move drastically up. It moved 13%. But it's still, I'm sorry, I just went back to here. The S&P went up 10%, Apple went up 20%. You just got double the move on the largest company on the planet. And y'all don't even know how to do this. All right. Listening to the wrong people. All right. Keep investing and trading simple because it is simple if you know what to look for. Y'all know how much the options were up today? Y'all see how it took from September till what is it? December, October, November, December. It took 3 months for Apple to give you a 20% return. Now, guys, 20% is crazy because a lot of y'all are like, no, Joel, I'd rather get my little 2-3% in my CD. And I'm like, are you 85 years old? Like, why are you buying a CD? Unless I'm 90 or 95, there's no reason for me to be in a CD. And you got $1,000. I hear this all the time. I got about $1,500, but I don't want to lose it, Joel. So I was listening to my mom and she told me to put it in a CD. And I'm like, your 1,500 is making 3%. So you making what, $30 off your 1,500? I can go outside and pick up bottles, recycling bottles, and take it for recycling and make more money than your 1,500 is doing over a full year. Y'all sound ridiculous right now. Y'all sound ridiculous. And then you want the 1,500 to go to $1 million because you listening to the wrong people. You listening to people that's scared. They never made no money before and they don't know how to do it. And they don't want you to make the same mistakes that they made. But all they're doing is teaching you the same mistakes that they made. All right. I want you guys to have 90% of your assets in boring 10% moves. I want you to. But you got to be aggressive with something. Like I said, I don't care if you're a millionaire. I can show you how to take that $1,000 or $2,000 and try to grow it past the millions that you have sitting in a CD making 1% a year. But you got to be aggressive and you got to know that it can be done because the Apple options were up 50% today. And it didn't take 6 months for these Apple options to be up 50%. It took 1 day. Well, 3 days if you want to count Friday, Saturday, Sunday, Monday. They were up 50%. Now, this doesn't mean that you should run out there and buy Apple. Remember, anything that we talk about today are the opinions of Joel Harrison. But if you don't know that it can be done, I can understand why so many people are reluctant to come into the market. Man, I was talking to some people the other day, and they literally told me the stock market was a gamble and that nobody made money in it. And I was like, who the hell are you talking to? Who? That might have been the dumbest thing I've ever heard in my life. The dumbest. And a lot of you guys are out there spreading this craziness. All right, because you don't know how to pull up a chart. You don't know how to pull up Apple and shut down people and say, you know what? Let's just go and look and see what Apple did from 2003 until now. Oh, well, if I go back here and I see that Apple was $10 a stock and then it went to 170, how did that lose people money? When you go back and you look at McDonald's and you say, well, what did McDonald's do in the last, 20 years? And it went from $20 to $2.50. You're like, oh, what I'm saying right now is ridiculous. You could have had a $200,000 house that went to 2.5 million, and you didn't have to live in California. You could have had $200,000 be worth $2.5 million. But you in McDonald's, we ain't talking about, and this is what I know. I went back to 2003, but I mean 2003, guys. McDonald's was an established company. Like, it wasn't like a company nobody had ever heard of in 2003, right? People that got kids right now that are 18, you were feeding your kids McDonald's when they were 1. And most of y'all had $20,000, $200,000. You could have put $20,000 in McDonald's, and that $20,000, the life of your kid would be worth could have paid for the house that you probably live in right now in McDonald's. But yet y'all running out here telling people that the stock market don't make you money and that this is not where you earn the fastest gains. Are you kidding me? That's why y'all hear me talk like this all the time, because y'all sound real ignorant right about now. Disney. I'm pulling up regular companies. Disney. 2003 was a $13 stock. No, is that 13? Is that right? Am I reading this correctly? 13 to 200? 13 to 200 is giving you guys these ridiculous returns. Well, I guess, that was back then. I don't think it's going to happen again. This is the Big Short, Joel. This is it. Well, let's look at the spiders. Let's look at what the market's done for the past. This is a month chart. Guess I can't really go back that far, even though I'm using the month chart. The market is battle tested. Y'all know this is the 2009 real estate crisis. Y'all remember when everybody lost all their money in real estate? We lost all our money in real estate. $75,000 would be worth about $450 right now. I've seen some real estate kind of do that, right? I've seen some real estate drop to like 100 and then grow to like 300. This is California type moves in the S&P 500, which is literally even more boring than McDonald's. But yet, the stock market don't make y'all no money. Okay. All right, so let me get to some of y'all stocks. All right, this is what, 742. I've ran it enough. I got enough people on. Let's look at some of your stocks. Let me move my picture. All right, let me go through some of the comments. Charlotte said, hello. Well, hello there. Glad that you're on today. All right, so let's look at PFE. All right, which is Pfizer. Why are we going to look at Pfizer? Because Pfizer is a coronavirus stock. How are we gonna analyze this, guys? Well, first of all, sorry about that. I hit the wrong button. Pfizer, let's do a quick analysis. We're gonna pull up Pfizer. Don't see them doing this on CNBC. Has a market cap of $288 billion in the last 5 years. If you had invested in this, could you have doubled your money in Pfizer? No. If I couldn't double my money in the last 5 years, why y'all expecting to double y'all money again in the next year? Tell me. Tell me why. I'm going to tell you why, because you didn't pull up Yahoo Finance. You looked on TV. You tried to use your big brain. And I'm not saying you, Shelly, because I know that you're intelligent. You're in the insider trading. You want me to analyze it for different reasons. But a lot of people are buying this because they hear that Pfizer has the corona. And you think, oh, if they make billions of dollars, that billions of dollars is going to somehow find its way in my pocket. And then you look at the last 5 years, and even on this bullish run that it's got right now, Pfizer ain't even double in the last 5 years. That means it didn't even double. So why the heck are you expecting it to double in the next 5 weeks? Because you're uneducated. That's why. It's the only reason. A stock this big is not going to double like that. Okay? Maybe if it was 2 billion in size, maybe it can double or triple. But this is just, y'all see how I analyze that in what, 20 seconds? This is what I'm teaching your kids. I did Mission Impossible Kids last month. I had over 80 people sign up as adults to learn the stock market. I had 3 people sign up their kids. 3. I had 100 people, adults interested in the stock market. And then on Saturday, I was going to teach your kids, and y'all signed up 3. All right. Millionaire challenge. You gotta teach the youth the fundamental basics if you want them to understand the market, because 99% of y'all shouldn't be trading in the first place. Remember, I do consultations all the time. Some of y'all shouldn't be trading. Y'all don't have the knowledge or the time. You need to teach it to your kids. So if you see me pull up a Mission Impossible Kids class, put your kids in the class. All right. All right. So let's look at Pfizer options. All right. Even if I was looking at Pfizer here from 2009, it grew in value. But even at the lows of 2020, you just got 100% return. And guys, that's when Pfizer dropped the most. Pfizer dropped. It gave you that kind of drop that you wanted. It dropped 40%. Remember, a stock that drops 40%, right? A stock that drops 40% can grow 67%. A stock that drops 40% can grow 67% if it gets back to its all-time highs. And sure enough, because Pfizer was involved with the coronavirus and putting out a vaccine, that's why you saw a lot of people get in. All you had to do is draw a simple little line. If it touched its 200-day moving average, like I teach y'all, and it gets above that line and it starts to go bullish, you could have made easy money, because investing in the stock market is easy if you know what to look for. All right. And then not only did it give you a 60% return, it gave you 100%, because it ended up going higher than it actually, that resistance level. It gave you a 109% return. So if you're buying it today, expecting it to make another 109% return in the next year, you need to educate yourself. Now, if you're buying options on it, let's see how those options did today. Y'all see that you see that it was down 5% today. That means the options didn't really do that well today. But let's see if there's unusual options activity in Pfizer. So let's look at the volume. This is the call to put ratio. There's about 12,000 calls being bought. Even if I go out to January, I don't really see anything unusual. Well, this is I like this 764.82 versus 204. Ooh, look at this. Ooh, look at that, guys. That's unusual, right? You're literally looking at unusual options activity with your own eyes. Look, I'm gonna write that down. Pfizer. All right, and this is what you guys should be doing during this session. This is homework time. Not just listen to Joel rant and scream. Write down some of these stocks. All right, something going on with this 55 strike. So if I want to try to give myself a chance to make money on a slow moving stock, I'm gonna go into the options market. First of all, I'm gonna learn the options market. All right, learn the options market first. All right. And then, learn risk to reward and all of that type of stuff. And then try to get, some gains in it. But Pfizer can make you a decent amount of money, maybe if you take that particular trade. So, that was Pfizer. All right. Willis said, "What's up? Hello. What's going on?" All right. Charlotte wants us to look at good old Disney. I made a lot of money in Disney lately. Ooh, I made a lot of money today. Check this out. Disney. Let's
It doesn't look like you have an app named Disney. If you'd like.
anyway. All right, let's look at Disney. All right, so Disney, guys, is down. Let's go over here. Disney right now was down 30%. It was down 30%. Does that mean when it goes back to its highs, I'm going to make 30%? Nah. And guys, remember, the parks are not even open right now. If Disney dropped 30%, if we ever get back to its all-time highs, I'm going to make 43%. Ooh, I like Disney, right? Why? Because everybody like, how can you not like Disney? Disney ain't going to zero. And I promise y'all, Disney is going to be part of the metaverse. Disney always does whatever they need to do to get money. They just do. That's what mega companies like this is just what they do. So let's go and let's analyze it real quick. All right, so if we looked up Disney is a $250 billion company. If you didn't know that, now you know. It's $250 million in size. All right. In the last 5 years, Disney rose from about $100. It got as high as 189, meaning that Disney doesn't really give you those doubles. Now it's at 140. Even when it was $96 at the March lows, it got all the way up to 189. So Disney normally doesn't give you a double like that, but it got you close. But what I love about solid companies like this is that if you go out far enough, like 6 to 12 months, maybe buy options on it, you can turn a boring company. Remember how y'all got boring portfolios? And then I say, yo, create a aggressive portfolio. Think of Disney as your boring portfolio. Put Disney in that boring portfolio. And then your options is that aggressive side. How can I make 10 times, 20 times, 30 times my money or my investment in something further out? You can do it in the options market. Okay. Please get educated or throw some money at Disney. Even if I use the straight up stock method of investing, remember, if it's down 30%, a 50% return, guys, is nothing to play with. And if I can get a 50% return in 6 months or 7 months, not saying that it's going to happen, I can still double every single year. A lot of you guys with $1,000 can get to $1 million in 10 years and not have to save 50,000 a year for 20 years. Y'all see how the numbers are working in your favor? If you took $1,000 and gave yourself 365 days for it to double, and then when it doubles, you put it into another high growth company and then let that double. You literally can give yourself a whole year to get that double, and then take those funds and put it into something else and give yourself a whole nother year to get that to double. I'm just trying to do it in 10 trades, but I'm different. Okay. So Disney is a good one. And Disney was up 2%. Take a guess at what you think the options were up today. Just take a guess. 10%, 20%, 30%. Well, let's look at those options. If you had bought those options and you saw unusual options activity at the 155 strike, that 155 strike was up, okay, 20% in one day. One day. One day. You got half the move that you're trying to get in a whole year in the options market. Okay. Not telling you to put your whole 401k in it. I'm talking about your little boring aggressive account. All right. But that's pretty good for a one-day move on something like Disney. Like that's crazy, right? Okay, let's look at another one. Let's look at Coin. What is Coin? Coinbase. Coinbase, guys. Actually, before we go to Coinbase, let's see if there's any unusual options activity further out for Disney. We see that there's some unusual activity at the 155 strike. Even in March, look at this guy's 155 strike. All right. Well, I don't like it. Actually, let's pump the brakes, because when I see 6,000 over here, that's unusual, but not when I see 9,000 over here on the put side. So be careful. It's still the 155 strike, but just be careful on, if you're going all the way out to maybe April. I like to go out to maybe like June. Look at this, guys. This is unusual too. But anytime you see numbers like this that's similar, usually that's somebody buying, a spread, or buying they might be buying a straddle or a strangle. So be careful here too. You see how there's 32,000 here and 31,000 there. They're like equal to each other. It looks unusual until you see it on the put side as well. So just be careful. You literally want to see 30,000 over here and nothing over here. That's the type of unusual activity that I look for. But let's look at Coin. Coin is Coinbase. No matter how much we argue in the room, guys, Coinbase, whether you hate it or love it, is still the most reputable cryptocurrency brokerage that's out there. It just is. Now there's no 200-day moving average. And there's no 200-day moving average because it hasn't even been out for 200 days. All right, this stock IPO'd in April. I guess it's been more than 200 days, but it hasn't been a year. But it IPO'd in April at the price of 381. It's now down. Check this out. It's down from its highs 43%. 43. So let's do the test. 40%. If it goes back to highs, I can make about 67, maybe 70%. You grab it at 50%, you get your double. So when you go to 429, a lot of people, including myself, bought it right in the 210, 215 area. Right? 215, guys, was exactly 50% off. And look at where it bottomed at. Right around 215. Why do you think it bottomed at 215? Why didn't it go to 200? 200 is a solid number. Why didn't it go to 150? Why didn't it go to 210? Why 215? Because millionaires know this. We know that when something drops 50%, it's on sale. It's the most reputable cryptocurrency brokerage out there. It just is. I know people have lost money, in the wallets on Coinbase. There's been money lost on all the wallets for every brokerage. All right. It just happens. It's cryptocurrency. That's why I store my money in vaults. All right, which is offline. You can't steal my stuff. Right. And Coinbase has vaults. I haven't really seen any other brokerages that have vaults for your cryptocurrency. All right. But you got to get educated on it. But when it dropped 50%, everybody came in and bought it. Very great area to buy. But let's analyze it real quick. Coinbase. When you're buying crypto.com, are you guys looking at the price of crypto.com? Or are you looking at the market cap? Because if you're looking at price, you're a rookie. Coinbase is a $68 billion brokerage. Maybe it can grow. When I looked at Binance, a lot of you guys don't know about the Binance coin, but the Binance coin, which is a brokerage, is a $100 billion broker. So if Coinbase is pretty much the best, but Binance is even bigger, maybe Coinbase can grow a little bit. So if you're buying crypto.com, why are you buying it? Are you buying it because it's 60 cents and you think it can go to $1 or $2 or $5? Then you are a rookie. I understand the numbers behind it. You're on the right track, trying to flip your money, but you got to understand why you're doing it. You're doing it because if crypto.com, which is a broker that's using a coin, is similar to Binance coin, which is similar to Coinbase, and they got $100 billion valuations or market capitalizations, 100 and what, 89, I believe. And this is 15. This is why Joel is buying it, because Joel likes his money to flip. 1,000, 2,000, 4, 8, 6, 10, 32, 64, 128, 256, 512, 1 million. And if this grows from 15 to half the size of Coinbase, which is 40 billion, I'm going to make 3 times my money. $1,000 investment can be worth 3,000. If this bad boy gets to 100 billion, I'm going to make like 6 or 7 times my money. $1,000 be worth 7 grand. This is how you should be thinking if you're trying to make millions. What can I get in that can flip? Can it flip? And you can't tell if it can flip by looking at this coin price. That doesn't tell you what it can do. All right. So Coinbase, it's been dropping. It's got some support at 215. All you need to do for now, if you're trading it, looks like it's going down. Right? It's just going down. You traders that's trading it, it's got to break this trend line. It's got to go right back up if it wants to get back to 370, but it has to start going up first. And it has to break the trend and then try to fly to 370. And if it can stay at 370, then it can grow. But even from here to 370 is a 40% return. That's crazy. All right. Let's look at another one. Let's look at we looked at the SPY. Thank you, Chastity. But Chastity, sorry about that. We looked at SPY earlier. Let's look at a firm. So Justin Butler wants us to look at a firm. So what is a firm? A firm is a fintech company. All right. Fintech companies are finance. So everybody knows I hate banks. You're never going to see me investing in JP Morgan or Bank of America. Just not doing it anymore. So the new banks is what I invest in, and that's the fintech companies. Fintech companies are companies like Square, PayPal, Affirm, Upstart, Visa. Visa's still fintech. Those are the types of banking type companies that are now becoming our new banks. All right. So let's go ahead and look at it real quick. So why are we buying it? right? Why are we buying this particular stock? So if you pull up a firm, I don't y'all see how I never talk about share price because rookies talk about share price. Uneducated people that buy stock talk about stock price. I don't care about that. A firm tomorrow can say they want their stock to be $1. They can do a reverse stock split, 100-to-1 reverse stock split. Most of y'all think you're going to get rich because you're uneducated, but you're not. All right. They can manipulate the share price, but they can't manipulate the market cap. This is where y'all make all your money. All right. So why are we buying a firm? We're buying a firm because it's $30 billion. What is it similar to? Well, it's similar to Square. Similar to Square.
I found this on the web.
Square is 82. Square is 82. A firm was 31. Man, if a firm can grow and be as big as Square, shoot, or even get to where Square is and Square moves up in price, I can make double my money. Well, is it possible, Joel? Can you actually make double your money? Has it ever doubled its money in a year? Well, that's what these charts are for. Well, I mean, back in 2000, July of this year, it went from 56 to 162. It tripled. This bad boy tripled in 1 year. Yeah, it's got the oomph to be able to do what you're trying to do. Nah, I think I'm just going to buy the spiders and get rich with my 1,000. All right. Does it mean you about to make it again? Nah. But we got to see what it's done. All right. A firm looks like it's approaching its 200-day moving average. Great. Let it get there. I've been telling everybody all week long, why y'all buying this? Wait. You trying to be this person to buy it for $99. You got 99 problems and profit ain't one. Well, actually, it is one. All right. Let it get down to 89. Then break this and start going up in price. All right. Let it come down to the 200. If it does, I mean, it got close to it. Guys, just even if you buy it right here at 130, you didn't miss out. Joe, my buddy bought it for 110 and I'm buying it 20% higher. Yeah, because we don't care about where it came from. We care about where it's going. It's still a 57% return if it goes back to 175. That's a 50% return if we get back to its all-time highs, and a stock has a 90% chance of getting back to its all-time highs. 90% at some point. Doesn't mean that it's going to happen in the next year. If you believe in fintech, if you believe in this space, then you got to buy when it's time to buy. And if you want to be even more aggressive, then you learn the options market and see if you can find some unusual options activity. Try to get out as far as you can and ride the wave with less money. I don't really see anything unusual on a firm. Even if look at this. Y'all see how it picks up in January? Why are more people willing to take contracts, 30 days out than now? You got just as many people buying January options as you got them buying options right now. 290 January options. They're more expensive. They're 1,100. 300. Why is that less expensive? Oh, because it's out of the money. 300. Right? Take a shot at it. Some of y'all spend $300 at Cheesecake Factory, but you scared to buy a stock. All right. Y'all do it all the time. Look, these options are increasing. Y'all see this unusual options activity? Y'all see 5,900 over here. You don't even see 1,000 over here. Something's popping off in February. All right, take a shot, you know? But again, learn the options market, guys, because you can lose all your money. All right, it's a trading tool. It's a trading tool. Let's look at another stock. Let's look at Facebook user wants to look at PayPal and Amazon long term. What does long term means? That means 1 year or longer. Since we're talking about fintech companies, if I was thinking about buying PayPal on a long term options, we'll look at the options last. Why should y'all be buying PayPal? I know a lot of you guys are like, oh my God, PayPal's going to zero now. Nobody's ever going to use PayPal again, ever. Nobody. Don't PayPal me anymore. We're going to zero. All right. PayPal is getting smarter. Y'all know when PayPal came out with their numbers, they said, yo, we're doing even better than we did, a year from now. And the stock plummeted. Sometimes stocks just go down. It's down 42%. All right, 42%. What does that mean? That means I can make a 70% return to the upside in one of the most solid fintech companies out there. Y'all have heard me talking about PayPal like every other day. I'm like, guys, this is it. You don't ever get a chance like this to buy PayPal. And if that bad boy gets to 50%, you're going to see me go, you're going to see me go in heavy on options, stock, whatever kind of money that I can find. Why? Because it's rare when you see something on sale like this. It's on super duper ridiculous sale. Does it mean that we can, does it mean that we can't go down to 173? Does that mean that we're turning right here? Nah. But I bet you we at least get back to 250, because even if this stock decides to go down, even if it decides that it's never going back to 310, it's going to go back to the 200-day, because the 200-day is the mean. It's the average. Everything reverts back to the mean. So it's either going to revert back to the mean this way, or it's going to revert back to the mean this way before it turns around and goes to zero. Even if it does that, how much money do you make? Is that right? Am I reading that right? 40 something percent? That's crazy. That's 70%. Well, right around that 67 to 70. Y'all see the numbers aren't exact. That's 40% on a stock that's bearish, because we get what we call dead cat bounces. Well, where all these people that were shorting it take their profit, it goes back to here, hit the 200, and then go back down. It's still 40% to there. So even the bears are looking like, man, let me take my profit and then put my short back on right there. All right, because it's PayPal. We're not talking about some company. Like, I can see if it was a firm or upstart, companies that are trying to establish themselves. PayPal is a $200 billion company, right? When we pulled up its numbers, PayPal was a $200 billion company in the last 5 years. Could you have made money? Of course you could. It went from $42 all the way to $290. Whew. Could have made 5 times your money. That means you were making 100% return each year. You didn't have to do nothing. You had no work. I'm pretty sure when PayPal dropped from 114 to that was 114. What's that? 112, 114 to 95. That really wasn't that big of a jump to the downside. 85, 74. Let's look at the charts. Let's see if PayPal has ever dropped that much. Let's look at the month chart. Erase all of this. And let's see what PayPal has done since 2016. Now, the company IPO'd in 2015 and never looked back. Did y'all know that Elon Musk, the richest man in the world, invented PayPal? Some of y'all didn't know that. The richest man on the planet that tells y'all to buy cryptocurrency invented PayPal. Y'all heard what I just said? The richest man in the world that's got the number one car company on the planet. He got a car company that most of y'all never heard of to be worth $1 trillion. He invented PayPal and then went out and invented a car company and now he's shooting rockets to space. All right. A genius invented this. I strongly believe PayPal will be here in the next 5 to 10 years. Okay? But all is done if you're using the Fibonacci retracements. It's come down about 50% from the March lows. That means when the March lows happened and it ran in price, we came down 50% from that, from that area. Now, it's not the same 50%, which is 50% off, but it dropped 50%. I always teach people that when it drops 50 and it starts to go back up, anything between 50 and 75 on a company like this is unheard of, right? Even when you pull up Square, since we're talking about fintech companies, when you pull up Square, you're seeing the same thing. They're all doing the same thing because they're all fintech companies. Square, on the other hand, is close to its 50%. You see how they all run the same way? Square, though, can make you a little bit more money. All right. I think if it goes from where we are right now back to highs, you make about you make about a 70% return, whether it's Square or PayPal. I say own both of them. All right. Maybe one goes to zero, the other one doesn't. And own a firm. But they're all exhibiting the same thing. At some point, you got to buy these great stocks that you can make. And if you're scared of the options market, these are the type of stocks that can give you 100% return. Why? Because look at what Square has done in the past 5 years. Remember, PayPal gave you what, gave you 5 times your money? No, I'm sorry, it gave you a 500% return. This went from $17 to $170. That's crazy. Okay. All right. There's your 10 bag. That's your 10 bagger. Okay. And it's going to drop in price. That's just what stocks like these do, right? They grow, 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 but the market caps are still reasonable because they're competing with companies like Visa. That's worth 441. Until they reach 441, guys, they still got growth potential. They got growth potential. You got some high growth companies. All right, I think they put out the CNBC put out their top 50 like stocks that can give you growth. PayPal was one of them. I think I don't know, go look at that list, but I believe a lot of the stocks that we talked about today are on that particular list. Let's look at Amazon real quick. Amazon, long term. Why wouldn't you buy Amazon long term? When has it ever failed you? It fails you right here because it was what the this was 2018. We were going to, I think we were impeaching Trump. Then this was 2020. These were the March lows. That was the March hiccup. This was a hiccup right here. And we're talking about Amazon. Now, can Amazon drop to its 200-day moving average? Yeah, it can. Can Amazon give you a 10 times your money? We got to go look at it. Amazon. When you pull up Amazon, can it double in the next year? What has it done in 5 years? 5 years ago, if you bought Amazon, it was a $800 stock. 5 years later, it's a $3,400 stock. It grew 4 times its value. That means it grew from like 500 billion to almost 2 trillion. Is it going to grow 5 times again and get to 10 trillion? I don't know. Maybe. Okay. It still has growth. What has it done in the last year? It was choppy, but in the last year, if you bought Amazon, it only grew $300, which was what, 10%. Amazon's only up 10% from a year ago. So it looks like Amazon is slowing in growth. Okay. Even in the last 2 years, what has Amazon done? If you go to 2019 in November, it grew from 1,800 to 3,400. But look, guys, in a 2-year period, Amazon didn't even double its value in 2 years. But it gave you about what, 40 or 50% return. Still nothing to, be angry at. But if you're buying Amazon right now, expecting it to double or triple in the next 6 months or 12 months or even 2 years, you're being unrealistic. Okay. You might need to find something that's got a little bit more oomph. All right. Buddy, even if you were trading Amazon, how much did it make in the options market today? You bought Amazon options on Friday. Oh, Amazon was okay. Those options, okay. The options were okay. Kind of flat today. All right. Even though it was up 1%. Some options were up 6%. Some deep in the money were up 48%. All right. So Amazon, it's in my portfolio. I buy it, but I'm not expecting, but Amazon's in my boring like 401k IRA. It's not in my aggressive account that I'm trying to double or triple, within the next couple of years. All right, let's look at Willie wants to look at RCL. So RCL me off guard. Oh, Royal Caribbean. All right. So guys, these are considered the when the market opens back up, these are the types of stocks that do well. So Norwegian was pretty up today. Norwegian Caribbean. What is it? NCLH? Uh, or Norwegian Cruise Line. I said Caribbean. Norwegian Cruise Line was up pretty good today, and then Royal Caribbean was going to also be up. So you're, and look how much the options were up. They were up 200% in one day. That's absolutely bananas. All right, but what I also like about them is that the 200-day moving average is angled up. So the rule of thumb is if a stock like this is below the 200-day, it's on sale, but you really don't want to buy it until you get about 3 days where it breaks this trend and it stays green. Look at what we've done. We didn't do nothing but just come up here and hit the underside of this resistance line. That's why it pulled back to here. I need to see about 2 or 3 days. And then the first place it's going to run is probably this $84 area before it starts to go a little bit higher. But if you were able to buy options on it, you did pretty well. And if I was looking to see what it was doing, on the hour chart, it's just now breaking above the Ichimoku, which is this yellow line. Stocks usually run for 7 to 10 days, and then they go down 7 to 10 days. Royal Caribbean has been going down since November the 9th. So Royal Caribbean has been going down for 4 weeks. So at some point, guys, there's going to be some pressure back to the upside. This might be it. It might give you probably, I know they're waiting for news on Friday. So if you're trying to get some quick moves and when the economy opens back up type stocks, that's your casino stocks, your Ubers and your Lyfts. They were probably up today. Your Royal Caribbean, your hotels. Again, your casinos, then trading them for the next 3 or 4 days, you might be able to make a little bit of money. But they did pretty well. They were up 194. If I just did a rough look just to see how they were doing, RCL was up. Royal Caribbean is $1 billion company. Guys, $1 billion, that's like the minimum, right? This stock was a $5 stock in May and it went to 16. It gave you about 3 times your money. But look at where we're back. We're back at what the highs were before COVID even happened. Oh, this is Ready Capital. Sorry about that. Looking at the wrong stock. I do that every now and then. But for 5 years, Royal Caribbean was going down in price before COVID. I don't really like seeing charts like this for an investment. I literally would only be trading Royal Caribbean. It's been going down for 5 years. I don't like stuff like that. All right. I would trade Royal Caribbean, maybe buy options on it. I will not trade it. A Norwegian cruise line, though, on the other hand, is a more solid one, but they're both down. So I would trade both of these. Okay. All right, let's look at AMD and Nvidia. So these are your semiconductor companies. Semiconductors. What are semiconductors? Semiconductors are the heart of all technology. If you have a phone, it runs with semiconductor chips. If you have a computer, most of us used to remember Intel chips, right? Intel is a semiconductor company. All right. Well, Nvidia is the Beyonce of the market right now. It's the hottest stock. I don't know if y'all know this or not. It's just the hottest stock because it's involved in all of the stuff that your kids are talking about. Nvidia is involved in cryptocurrency mining. Nvidia is involved in electric cars. Nvidia is involved in virtual reality. Nvidia is involved in the metaverse. It's involved with everything, and it's the number one company that's out there. I've been preaching. This is one of my claims to fame. If you go to my insider trading room and you just type 2014 or 15 or 2016, type Joel Nvidia, you'll hear me talking about Nvidia with the same oomph that I was 3, 4, 5 years ago. I love Nvidia. All right. My son put me on to Nvidia back in 2017 or 18 when he started to buy it. He's up something ridiculous. All right. So, as a long term investment, guys, you got to wait. Can this stock give you doubles? Of course it can. This stock went to 195 and then almost double from and that was October of this year. And it almost gave you a double. And it's already big, but it is getting so big that the growth of the company is still there. I think it's going to be $1 trillion company. Some people think it's going to grow to 10 trillion. All right, but I think it gets to a trillion very easily. Okay. That's 30% from here. I think it got close to it. All right. But the last 5 years, it ran from 27 to 300. There's your 10 times its value. But you missed out on it now. Can it grow 10 times its value again? It could get a run, but you kind of missed it. I kind of would start I like buying options on this because they're going to be obscene. But you can start putting this over. I wouldn't say put it into your boring account, but if you got a stock mortgage and you're buying that's a term that I put out there where you buy a stock over and over again for the next 1 year to 5 years. I don't mind you guys doing a stock mortgage on Nvidia. I did a stock mortgage with I think Facebook and Nvidia about 2 or 3 years ago, and I outperformed all the market makers on TV. I think I was up 30 or 30 I think I was up 43%. I got to go back and check the numbers. And all I did was buy Facebook and Nvidia on the first of every month. I only bought it 12 times. And I outperform all the brilliant minds on Wall Street, cuz investing and trading is easy if you know what to look for. So I really like this one. It's 750 billion. AMD is 167. Y'all see how much smaller it is than Nvidia, but if you're trying to make a lot of money, or if you're trying to double your money, you double your money and triple your money from companies that are smaller, not bigger. I love Amazon and Google and Microsoft, but that's not where I'm trying to get wealthy. I'm trying to maintain with those companies, but I'm trying to get wealthy in companies like this, companies like a firm, companies like, these companies that are smaller that can grow. Maybe a Royal Caribbean, if it can grow from a billion to 5 billion or 10 billion again. All right. But AMD is like the baby to NVIDIA, and it has room to grow. All right. It's got a 2.0 beta. The options are obscene. Like, guys, let me show y'all. Was this up today? All right. It wasn't up. I want to show y'all something that was up and show y'all when these things are up in price. Even the options, even if you're looking at the options and you are trading it, and the option is down 50% or 80%. Sometimes I like to go in there and buy some of these options that's down 80%, because if it goes back to the price, if somehow or another some news comes out and it goes back to the price that you bought it at, these options are going to fly just like your stock. Your stocks and your options can work the same exact way. You just got to use the numbers to put it in, to put yourself in the right position. Doesn't mean that it's going to work. It's just that, if you're trying to manipulate numbers and try to get these 150 and 400% gains, this is how you do it in the options market. Okay. Or you try to find something that's running that day, maybe something like Baba. Everybody was scared to buy Baba, but if you were to buy Alibaba is a Chinese stock. And Alibaba, the Chinese stock, a lot of people think that it's going to get delisted. All right, meaning that you won't be able to buy that Chinese stock on the American New York Stock Exchange. And if that happens, I've never seen a company get delisted, so I'm not going to sit out here and tell you I know exactly what will happen. But a lot of people are scared because people are going to start pulling their funds from that stock. But then it got some good news today, and this stock was up 300% in one day. Now, check this out. Some people, we already had all of this news this morning. We had all this news about Alibaba before the market even opened. Do you know that you could have taken that information that you read on Reddit? You could have woke up this morning, saw Baba up. You could have seen Baba up in price. And you could have said to yourself, you know what? You still could have got in at 10 or 11 o'clock. And if you were using my techniques, you would have seen Baba was up. This is right around 9:45 where I tell people to buy. I teach this in webinar week. But let's say you saw that Baba was up. You see it all on TV. You see everybody talking about Alibaba. And you're like, well, I don't like chasing, so I can't really make any money in it. When you have that type of thinking, you don't make money in this market. Like if you say you can't do it, it ain't happening. Joel says you can do it all if you know how to do it. It's just the people you talk to don't know how. For free, I teach you guys how to do this. Right? We know to get in at 9:45. We know to go look for unusual options activity. Because we know that we're not going to be the ones that tell us how much money we can make. We're going to go literally to the options market and we literally going to say, where is everybody going? This is the club right now. This is the club that everybody's going to. Everybody's going to Club 120. All right. That's the club everybody going to. You see everybody talking about it. We all go to the club. We all get in at 9:45. And while you thinking that you got in late or you can't make money on the same day that you hear about something, old Jolie Joel and all of his buddies decide we gonna get in right around 9:45 on a stock that's been bearish all for like the last month. Finally got some good news today. At 9:45, we all jump in at $240. You've never made 100% return in your life. And then all of a sudden, you turn 100% return. Well, that's about 90. You turn 100% return in 45 minutes. I'm sorry, 9:45 to 10:30, 15. Yeah, in 45 minutes. 100% return. Some people ain't never turned 100%. You just did it in 45 minutes. And you didn't use the $200,000 that's in your Fidelity account. You're doing it with a little account that you're being a little bit more aggressive with. And now maybe that $1,000 is now worth $2,000. You do that, what, 8 more times, you at $1 million. 8. This wasn't a hard trade at all. They were talking about it all over TV this morning. Alibaba has never had returns like this ever. And that was before it hit 10. All right. That bad boy ran. And here's the thing. I just showed y'all 100% here. Y'all know what it actually did? This bad, you could have taken $240. This is going to make y'all extremely mad. That $240 by the end of the day was worth $600. That $200 you started with at the beginning of the day was worth $600 by the end of the day. You just made $400 off of your 200. Trading something you got in late on that everybody told you is impossible to make. And here we in the Ninja Trading Room talking about these trades every day. We always buy stuff late. We see about it on TV. We be like, oh, okay, I'll just wait till about 9:40, 9:45. They talking about it. Does it have enough room to run? Yeah. And then you get in, you do your risk assessment, then you make money. I teach y'all this on day 3 of webinar week. All right. Learn how to do it. All right, let's look at dang, I had AMD and Nvidia up there the whole time. Sorry about that. Let's look at, Sheena said PayPal. Oh, we already looked at PayPal. So you're going to have to go in reverse and look at it. Let's look at Hood. Let's go to the Hood. Let's look at Hood. Hood is Robin Hood. All right. Robin Hood. Let's pull up the 200-day. Let's erase everything. Robin Hood. Everybody knows about Robin Hood. I don't even have to explain what this is. Most of us have a Robin Hood account. And what has Robin Hood been doing? Going down. IPO $70, went to $85, and then it dropped. What's our rule in the insider trading room for companies that IPO? Well, the rule is if a stock IPOs, you have to give it 3 months before you buy it. Right? So if it IPO'd in August, we already told everybody you shouldn't be buying this stock until August, September, October, November, right around this time. But even when you buy it right around this time, I want to see it start going back up in price. Okay? So we're going to remove that. We're now at the 3-month part. I've been getting people that says, Joel, is it time? Is it time now? Not yet. But if you're looking at it as an investment for your kids, or yourself, let it break this trend. Looks like right around the $25 range is where everybody's probably going to get in at if we don't go lower. Let the stock drop. Let it do what it needs to do before it starts to go up. Quit trying to be, these money managers. You don't move the market. Your little $10,000 ain't gonna move the market. Your 100,000, your million ain't gonna move the market. Your $1 million can't move a $18 billion company. Maybe in the options world, but you ain't doing nothing in the stock market. All right. Let the billionaires turn the stock around, and then you need to start getting into it. But let's look at the options. The options were up. Let's see if there's unusual options. You got 8,000 there. You got 4,000 here. Let's go to January. December, you got unusual. Robinhood looks pretty good. Now, January, I don't really see anything unusual. So, except down here, who the heck bought 200? Somebody bought the 45 strike. Okay. Now, watch that end up panning out. But look at this. Why is everybody picking up in January? The fintech companies were picking up in January. Now, Robinhood is picking up in January. Why? Right. You remember a firm was picking up. I think PayPal was picking up in January. Robinhood's picking up in January. Is there something we don't know that they all know about? This is how I'm thinking. Right. So then I go to February, maybe March. This is May. I like to see 1,000. I don't really see 1,000. So, I'm chilling. But, if you want to take a shot at it, there you go in the options market. Okay. But it's been going down in price. So be careful. All right. Shelly May says she appreciates the room. Well, we appreciate you too, Shelly May, by saying that you appreciate the room. And we appreciate the room because I'm only one person. So if you have any questions or concerns about the market, you can ask the room questions and the room will help you. And then you do your due diligence from what you're taught. And then you go out and you look and see if some of this stuff makes sense. All right, let's take a look at Uber. I used to love Uber and Lyft, and I fell out of love with them. Just did. I just 200-day went down. You know, I I don't know. I fell out of love with Uber and Lyft. But Uber and Lyft went up pretty big today. But we really didn't do anything. We got above this trend line. But we need to stay above it for 2 or 3 days. Okay. What I don't like is I don't like the 200-day angle down. But if we run, even if this stock turns around and goes to zero, we probably will see 48 first, and then it turns around and goes to zero. But, with Omicron out, Uber is a losing business. Y'all know Uber doesn't make any money. Like they haven't made any money since the inception of Uber. Uber has never been a profitable company ever. They just got rich uncles that's just giving them money so that they can stay afloat. And the model seems kind of basic, right? Like, why are y'all losing money? So until they start making money, and someone said that I think within the next 2 or 3 years, the projection is that they'll finally be profitable. I don't know. Go and look them up on Yahoo Finance. But there is news that they may become profitable maybe soon. So a lot of people have been thinking about Uber for those reasons. But the options were up, I think, pretty big today. Like, guys, imagine making a 70% return on Uber. Stock is up 7%. You making 10 times that amount in a one-day move. Options are the ultimate trading tool. But looks good. Looks decent, but yeah. All right. Marlon said that Jack Dorsey and Kathy Woods are also pushing Bitcoin and crypto. So Kathy Woods has lost, when stocks are falling, when stocks are going up, everybody's a genius. When stocks are going down, people are frowned upon, including me. But stocks go up and down. That's just what they do. Kathy Woods investment firm made so much. Let's look up ARK. So Kathy Wood is the owner of this ARK investment ETF, and ARK, is this the same one? ARK, or is it ARKK? Yeah, ARK is it's pretty much like an index, kind of like what I created, like the What Would Joe Do index. The ARK investment ETF is an ETF that was developed by Kathy Woods Investments. Guys, Kathy Woods Investments have made a ridiculous amount of money, and everybody's tripping because they dropped 50%. Guys, every stock or anything that moves from $40 to 150, like, guys, the Kathy, from 2020, from the March lows, this joint went from $32. Her firm, the stocks went from $30 to 150. And y'all talking about she ain't a genius. And she's handling billions of dollars. Imagine a firm having, like, I don't know how much was in it, 1 or 10 billion. And it went from 30 to 150. Now the average firm is struggling making a 30% return a year. Struggling. Like most money managers, most firms, most hedge funds don't make 30% in 1 year. Anything that's over 15%, you're considered a genius. I've been averaging like 17 on my boring account. And to be honest, if I was to really go and do my numbers, I probably will be way higher than 17%, but I don't care. I know what I'm capable of doing. But my boring account, you know, they grew. I think I averaged 17, like 0.8%, almost close to 18% a year. And I ain't even doing nothing with it. I'm just picking these stocks and letting them grow. But my cryptocurrency, some of my aggressive accounts are growing way faster. I've earned 1,000% return in my Bitcoin. I've earned 1,000% return in my Tesla. Up really, really big in my Apples, my Microsofts, my Googles, my doubling my money. Well, this chick, and I don't mean to call her chick. That offends a lot of people. Sorry. But the firm was up 400% and y'all giving her a hard time? Like, Cats is literally bashing her, and I know what it is. It's like sour grapes. You're not that good. Well, let's see you make 400%. A lot of y'all to be bashing people like me and Kathy Wood, show me 300%. Y'all can't do it. People are so quick to challenge somebody or tell somebody that they're not great, but then they won't show you nothing. All right, if you gonna challenge this person, are you greater than them? Have you earned more than 30%, 20%, 10%, 5%? Y'all do it all the time. This woman made a 400% return. She a genius in my book. That's crazy. That's crazy. A 400% return? That's obscene. She smashed all the hedge funds that are out there. And so what? Her firm is down 50% from where it was. Boo hoo. Boo hoo. Who cares? Y'all care because y'all want to bash her. Stocks go up, stocks go down. Okay. She ain't thinking about y'all for the next year. She thinking 5, 10 years from now. She's aggressively investing. All right. She's not trying to just make 10% a year and get all the praise and the glory. She's trying to go down in history. She don't care about 10, 15, 20%. That's nothing to her. When you turn a 400%, You change the way you think about the market. You be like, hold up, I gotta outdo this. And you can't outdo it putting it in the S&P. All right. You guys got to change the way that you look at the market. You just got to do it. All right, let's look at Docusign. All right, Docusign. Docusign got smashed. I mean, it absolutely got crushed. Now it doesn't look like it got crushed here. So we're gonna pull up the 1 hour chart. Docusign went from oh, wait, is this right? That's not Docusign. This is Docusign. DOCU, I believe. All right, so Docusign is like it's like a it's like medical records where you use your signature, doctors, physicians. I believe no, Docusign is used for everybody, for all professionals that don't want to use their own signature. You can use Docusign. I believe that's kind of what they do. Very, very great stock in the beginning. Like during COVID, man, this stock was the stock to be in. Man, this stock has dropped from $300 down to 131. Way down here. I know a lot of you guys are like, that doesn't seem that bad of a drop. That's because you don't see this big old gap. This gap is crazy. Nobody saw that coming. Nobody saw this gap coming right here. I mean, that's a huge gap. A gap is when a stock closes at one price. It closed on December the 2nd at $230, and then you woke up the next day and that bad boy was at 150. This hurt a lot of people that were out there. But if you were to get options on it, I think the options were up like 20,000%. It was ridiculous. It was ridiculous. Like it made people fortunes if you bought a put on it to the downside. But today, if you were just able to see that fall and know that this was like one of the most ridiculous falls ever, it was down like I think 20% in one day. And we're talking about a company that's fairly big, right? Docusign is $28 billion in size. It's pretty big, so billions of dollars came out of this company. Last 5 years, you did well. 53 to 143, 3 times your money. At one point, you almost made 4 or 5 times your money. This is the same type of move Kathy Woods gave you. All right, tremendous gains. If you were to buy options on it and you were buying it to the upside, even after that 20% drop, oh, they still weren't up they still weren't up today. Some were up 39% to 130 strike. All right. But look like the puts and the calls lost your money. Okay. All the money was made off of that big drop. Okay. So be careful. If you're buying it long term, the 200-day moving average is still angled up. You might get a relief. And remember, 80% of gaps fill. We might get back to 229. Well, 140 to 229. Think about this, guys. Even though the drop was so big, even though the drop was from, and I got to go in 8 minutes, even though the drop was 43%. Remember, when something drops 43% or 40%, you can get maybe 70% back. That's just filling the gap. We're not talking about if it ever got back to its highs way up here, because in actuality, Docusign is down 54% from its highs. 54%. That means if it goes back to 314, you make 100% return. 100%, but it's struggling right now. Okay. It's going to give you 67% to here. You make 100% or higher, 143. Yeah, you're going to make over hold up, you make over 100%. The actual percent is right around 120% if it goes back to its all-time highs, which is crazy. All right. Appreciate it, Michael. Yep, giving out free game. I want y'all to make this money. Appreciate it, Facebook user, about the chart setups. Worth every penny. I don't even know who's giving me this great testimonial, but I appreciate it. All right, we looked at Square. Uh, we'll take a look at Ethereum. We'll take a look at Ethereum on Yahoo Finance. All right, so Ethereum, guys, is the second largest cryptocurrency on the planet. Oh, when your Uncle Sam tells you that cryptocurrency is worthless, you're gonna say, but Ethereum is worth $500 billion. Some of y'all didn't even know this was the second largest cryptocurrency on the planet, and it's worth $500 billion. 500 billion real money. That's real. That's real. That's not fake. That's real. This goes from 500 billion to a trillion. Your $4,000 coin goes to $8,000 a coin. It's half the size of Bitcoin. Did y'all know that? Ethereum is half the size of Bitcoin because Bitcoin is worth about a trillion, right around a trillion. And we think it can go to 10 trillion. If this goes from 1 trillion to 10 trillion, this goes from 50,000 to 500,000 people. If this goes from a trillion to 10 trillion, this goes from 50,000 to 500,000. $500,000. Imagine investing 50 grand and then you're able to pay off your house. That's what crypto can do for you. Possibly. Not because I'm wishing and praying it can happen, but because it's a solid number. If Bitcoin's going to become the store of value of gold, and you know that gold is worth 10 trillion, well, then Bitcoin has to equal 10 trillion. It's already at 1 trillion. A lot of y'all didn't even think it can get to 1 billion. Then it got from 1 billion to 10 billion. Y'all said it's fake. Then it went from 10 billion to 100 billion. It's fake. That's when I got in. Y'all know I got in late. I got in late on Bitcoin. I didn't get in when it was a billion or 10 billion or 25 or 50. I got in when it was 100 billion. Because when they started talking about 10 trillion, I was like, well, shoot, let's see if it can get to a trillion first. Why? Because Apple and Microsoft had already reached a trillion. So we already knew that there were assets out there that can reach $1 trillion. Let's see if crypto can get there. And sure enough, it got there. All right. And now we think it can go to 10 trillion. Let's see if it can get to 2 trillion first to get to 100 grand. Because Apple and, Apple is already 2 trillion, almost 3 trillion. Microsoft is 2.5 trillion. Google 1.9 trillion. Facebook about 1 trillion. Bitcoin, y'all see the similarities? Trillion. Bitcoin is in the same space as all these other things, all of these other investable asset classes. They think it can be worth more than all of them if the world can get involved with it. But for now, it'll just stay with them. And I'm fine with that. I made my money from Bitcoin. I'm now invested in smaller things like Ethereum. Because now Ethereum can get to maybe the same size as Bitcoin. Why? Y'all ever heard of NFTs? Actually, don't even worry about NFTs. Have y'all ever heard of art? Art is now being sold using Ethereum. It's easier to do it. It's easier to make transactions happen where people can have anonymity. All right. Ethereum and cryptocurrency allows that anonymity. All right. Most people don't want y'all to know that they got money like that. They don't want to show up for events and buy things. All right. NFTs, buying, these virtual worlds within the metaverse. They got to do it. The metaverse operates off of crypto. For now, it is. So if you want to purchase certain things, you better start learning cryptocurrency and NFTs if you want to be involved in that. A lot of money being made without y'all. All right, because y'all listening to the wrong people. All right. But looking at the chart, if you had invested in, let's not even go 5 years. If you just 1 year ago today, invested in Ethereum, it was $500. And I remember a bunch of y'all complaining, $500? I ain't putting $500 in Ethereum. Well, now it's 4,000. Not only did you make a double, you made 8 times your money, right? You could have flipped it from, some of you guys are having problems flipping 500 to 1,000 and 1,000 to 2,000 and 2 to 4. You did 4 steps and you ain't do nothing. And that was within 1 year. Very easy investment. Okay. Are there other cryptos that are similar? Yeah. But you guys got to get educated. Quit buying things just because you want to go out there. I'm going to buy Sheeb. I'm going to go buy Shiba Inu because if it ever gets to $1 and I got 10 million coins, it's going to be worth 10 million. Hopefully it gets to $1. It ain't never getting to $1. Y'all sound real dumb right now. And y'all don't even realize it. Y'all adults. Y'all adults sounding like second graders. Because you didn't know nothing about this. All right. Shiba's worth 20 billion. Now, in order for this to go to $1, this has to go to like 900 trillion, something ridiculous. Like all the money on the planet, the whole world, the whole monetary system has to put all of their money, and Shiba Inu will be that coin. It literally has to be the coin that all money flows through. And you still won't have enough. It still won't reach $1 unless other governments start printing money. And some of you grown adults still waiting for it to get to $1. Sounding real dumb. And don't even realize it. In rooms just talking out loud. Y'all ever been places where people who thought they smart just be talking? And you be like, man, do they realize how idiotic they sound right now? That's a lot of y'all. A lot of y'all. Because you didn't know this number right here. All right. That's why we here today. All right. Not so that Joel can talk down on you and you can look bad in front of your spouse or your kids. It's so that you can get educated and quit making these ridiculous statements in situations, or listening to the wrong people tell you the wrong information, or not vetting the people that you guys are learning from, or going out there and spending 10, 15, $20,000 on the hype of somebody knowing something. I hear it all the time. Somebody offer you $10,000 class, you better show me that you at least invested 10,000 in something. What did you buy? Why should I buy 10? Like, who are you? Who are you for real? Why aren't you on TV? All right. I know y'all say the same for me, but at least I'm showing y'all, I'm educating y'all, I'm showing you why things happen. I'm showing you guys investments I've made. And then you can go into the insider trading room and literally type my name and year or the stock and see if I talked about it. Some of these educators that are out there, most of them have gone through our room. You don't believe me? Anybody that's teaching you something, go into our room, type their name, and see if something pops up. Y'all will be surprised. Like, dang. 3 months ago, they were like, Joe, what is a stock? 3 months later, they got classes that they charging $10,000. 3 months later. And now they masters. What? Or they're like the the investing gurus. Word? Are y'all really that dumb? All right. I have to talk to y'all this way because nobody else will. And your friends be losing money, your kids be losing money. Vet the people that you're talking to, please. All right. Lots of events comes out around November, December. Lots of events, lots of classes. This is like the time to make money. All right. That's why I'm heavily telling you guys to please watch yourself. Please be careful of what y'all pay for. All right. Please. All right. I'd rather y'all spend 1,000 or 2,000 on a class and then use 8,000 to invest. All right. If you're gonna gamble, just throw 8,000 at Tesla or something. A Tesla. If you're gonna throw money to the wind, or go buy some Apple options and at least make a whole bunch of money off of it. Okay. All right. I think that's about it. It's what, 9 o'clock. I got to get out of here. I had to vent towards the end. Sorry, I didn't get to Nike, Chastity. Sorry about that. Disney partnered with Vive. Oh, that's already in the NFT market. That is very good to hear. One of our Facebook users said that we could have doubled our money in Moderna. Moderna is a coronavirus stock, just like Pfizer. Okay, let's look at it real quick. Moderna is Myrna. Myrna, 5 years ago, $20 stock, 10 times your money. 1 year ago, even during the COVID lows, March 2020, when that's 21 March, where is it? March 2000 lows, it was a $29 stock. Not only did it double, it gave you 10 times your money. Remember, when the coronavirus stock happened, you know what I'm saying? You could have made a whole bunch of money. But guys, woo, look at this. Let's say you had a put on Moderna. And I'm not advising you to do this because all the money was made today. Don't buy a put today. You can day trade it perhaps. Look at how much money you could have made on the puts today. Woo, 400% returns on the puts, betting on it going down in value. All right. That money was made though. Don't run out there and just buy it just to be buying it. Okay. All right. Sorry we didn't get to Clove. I'll look at it next time. Come on earlier. DraftKings. DraftKings has been sucking, and I don't know why. I actually sold it out of my long-term account, so I am no longer invested in DraftKings. But I did last week. I think after one of these sessions, I put $2 on a bet on DraftKings, and I made $3,500 on a $18 bet, two lineups. So I was pretty excited about that because that paid for all of my Christmas gifts. True story. I put it in the insider trading room. Sorry we didn't get to American Airlines and Visa and Caterpillar, but I'm just showing you guys a couple of the stocks that you guys wanted me to analyze. We got ACMR. Willie said, thank you for something. You're welcome. GSAT, didn't take a look at that one either. Chewy, guys, is a stock that involves your pets. So we use Chewy actually to order medicine for my older dog. So Chewy was a pretty good company. I'm actually invested in Palantir. Palantir is also a Kathy Wood stock. What is this? GFS microchip company that partnered with Ford. Y'all better take a look at it. Willie dropping some gems on y'all. Ty says she loves ARC. And she also loves this group. We appreciate it. We all love you too. Yes, this video will be available on YouTube. And yes, I constantly throw shade, but it's good shade. I constantly throw shade, but it's good shade because I want you guys to not make the mistakes that I made in the past. Anything that I ever vent with you guys about is something that I did on my own, but I did it all in the beginning. And I'm trying to make sure that you guys don't make the same mistakes and that the people around you are not making the same mistakes. But I'm coming to you guys from Decatur, where it's greater. And before we leave, what's the quickest way to making $1 million?